Good morning, all. CamelbackTrading.org coming to you this Thursday morning, March 23rd. We are looking at Window Trader's market profile of the ES and SPY. So, in the aftermath of yesterday's vicious sell-off in M period, $7 range, the bottom line is the market has now put itself into a situation where it is in total balance, monthly, weekly, and daily. Now, we did have an outside day down, both the NQ and the ES. So that is bearish, but it is still balanced for now. So that puts into today into more important level here as what we're looking at as we'll talk about which each side, I believe, needs to defend. Okay? So we went out with a pretty big price spike yesterday in price probe. The price spike is basically below H's low. That's where the market spiked low and then we probed lower. Some people just use that as one big thing. They won't even use L's low. They'll just use H's low. And that's fine, whatever you want to use. I think L's low is important also because that's also going to be below where value low is. And if you start getting above that into up to around half back in H's low, value could be pulled up. But here's the bottom line. These are your two early lines in the sand. Sellers want to defend L's low and certainly H's low, where the price spike was. Okay? If they defend that, then the odds of taking out yesterday's low are good, and then the daily goes from balance to down, and at least the bears have that in their corner. Right? Nothing could happen in the monthly or weekly until the daily goes either down or up. So that's where the bears need to defend. So there's going to be a couple levels to defend this morning with 75 minutes to go. Depending on where the overnight high is, it'll be the overnight high, which right now is pretty damn close to where the price probe is. So that's a good risk-reward short the first time, if that's where it is, come 9:30. And then again, one last shot against halfback and H's low. Because any acceptance back into that, well, think about it. We had the 10-wide point of control, which will go out, and there's nothing really up here. Now, you might get a little stoppage around B and C's high because that's where the market, the way we spiked lower and it got accepted, they attempted to spike higher initially and got rejected. So that might be one other area. But however, if the sellers are going to give up this, the overnight, value, POC, well, then the question becomes is, well, if they gave all that up, how much are they going to defend up here? Okay? Now remember, it's in balance. So if we don't take out yesterday's low, but we take out yesterday's high, well, then we go back to up. Okay? So, again, that's why this is so important for the bears to defend. As far as the bulls, plain and simple, it's yesterday's low. If the bulls do not defend yesterday's low, well, then we're going to still be below all three of the moving averages, the 20 to 50 and the 200, and then the daily becomes firmly down. So the bulls have overnight low right now and yesterday's low to defend. That's basically where the game is at early today. Of course, it'll change as more MGI develops, but for now, that's your battle lines as the troops are amassing here for a big battle. NQ, pretty much the same thing, except NQ, let me see something real quick. Yeah, we haven't even gotten above our price probe in the overnight. NQ has. So remember, NQ, believe it or not, was acted the strongest out of everybody until they absolutely sold off yesterday and had the outside day down. Now, outside day down, but right now, they're not, they're pretty close to the price probe rather than the day's low. So that's a little better for them. Again, that's going to still be their line in the sand. The price, you could use A's low as the price spike. So between L's low and A's low and the overnight high. Look at that. That's a very visual area. Bears need to defend that, just like bulls need to defend this. And then in righty, same picture, okay? Now they spiked in K period below H's low. So there's your price spike and then your price probe, and they've been trading in M's range the whole time. So all of us pretty much have the same battle lines drawn, okay? So it's going to be very important to keep an eye on which side attempts to win it. It might take a while to see which side wins it. It might not be determined right away, but there's definitely something to figure out. What will change things? Well, when B period opens up, if we start one time framing up above L's low, and value starts getting pulled up. Well, then whatever advantage the sellers had starts going away. We did have an outside day down. That means we shouldn't have too much trouble taking out yesterday's low. Well, if we don't take it out, obviously sellers aren't as strong. Remember, this could purely have been just shaking out the week longs from the last 5 days and shorts piling on late. It purely could have been that. We'll know that because if we can't take out yesterday's low and we start grinding back into the meat of this profile, that's all it was. So those are the things we need to keep in mind. Again, it's easy for me to tell you what we're looking for right at 9:30. In the trading room, we're telling you this the whole time as it's changing. So again, for $30, I think it's worth your weight in gold to come check us out for 2 or 3 months. And then here's the chart. So here's the daily. The 200 closed at 392.53. Okay? So we're right below it right now. And we're certainly below the 20 and the 50. But again, that's one day doesn't make a market. We traded through all 3 of these averages in one day. So I can't just say, oh boy, the bulls are dead. Of course not. One day doesn't make a market. 2 days don't make a market. How do we react coming out of this balance? If we come back out of this balance to the upside, well, the bulls are right back in control. However, if we come out of it to the downside, now we are below all 3 of those again. And now, at least temporarily, my target would be down around the March 13th low. And if that doesn't hold, then we're talking about the December 22nd low. So those are the things to look at. We had our 3rd largest range yesterday and our 8th highest volume of the day. So volume and range are good. Hopefully we get a continuation of that. The one big thing that I've talked about that I think the bulls need to put to rest sooner rather than later, though, is this new lower high syndrome that we're starting to experience again this year. They better nip that in the bud. Thanks for the likes and subscribing. Good luck trading today, and we'll recap at 4 p.m.